Your family is losing $1,800 right now, every single year. That's 17 trips to the grocery store, 2 tanks of gas each month, half your annual utility bills vanishing because of a war nobody is explaining to you completely. 6 days from now, Trump meets Xi Jinping in South Korea. First face-to-face meeting in 6 years. One outcome means you keep losing $1,800, another outcome means $2,400, but here's what nobody is saying publicly. Both sides already know how this ends. October 30th is theater. The real decision was made 2 weeks ago. I'm going to show you exactly when and by whom. By the end of this video, you'll understand 3 things that will change how you see this completely. First, the mathematics, precise numbers showing how much you're losing and why companies aren't passing all costs to you yet. Second, the hidden leverage, a material that would shut down Tesla production, iPhone manufacturing, and F-35 fighter jets. China controls 70%, they know it. Third, what happens November 8th, a date nobody is talking about, but it decides everything. Let's start with what happened 143 hours ago. October 23rd, 143 hours back, the White House announces the meeting is scheduled. Markets explode upward. Hang Seng up 0.74%, Shanghai Composite up 0.71%, S&P 500 gains 1.1% for the week. Everyone celebrates, but here's what they missed. October 30th, the meeting. November 1st, tariff deadline. Between them, 18 hours. 18 hours to reach a deal or tariffs double from 18% to 100%. November 10th, 11 days after the meeting, the trade truce expires automatically without renewal. 3 dates, 18 days. Your money on the line. Yale Budget Lab, not some blogger or analyst, but an economics research laboratory at Yale University, calculated exact figures. Right now, the average American family loses $1,800 per year. But here's the critical part. That's an average. If you earn less than $50,000 annually, you're losing 3.6% of your income. Not $1,800, $1,350. But as a percentage of income, that's 3 times what wealthy households pay. If you earn above $200,000, you lose $5,350 in absolute terms. But that's only 1.1% of your income. Tariffs function as the most regressive tax in modern American history. Lower income families pay triple the rate. Nobody told you this directly. But wait, companies pay tariffs when goods cross borders, not you. So where do these numbers come from? Here's the breakdown. 37% of tariffs got passed to consumers, to you, immediately. You're already paying. Every time you buy clothing, prices jumped 34%. Leather goods up 36%, metals up 40%. 51% of tariffs got absorbed by companies themselves. They cut profit margins. Here's where it gets interesting. Target, Walmart, Adidas all published third quarter earnings in October. Every single report contains identical language. Direct quote, "We cannot maintain current margin structure if tariffs remain at this level." Know what that means? They're holding that 51% temporarily. They're betting on the outcome of October 30th. If a deal happens, they keep their reduced but acceptable margins. If no deal happens, that 51% shifts to you. By year end, the 37% you already pay becomes 88% of the burden. $1,800 becomes $2,400 automatically. Not because tariffs will increase, although they might, but because companies can no longer sustain losses. And here's what makes this catastrophic. Remember I mentioned the third outcome? The worst one? Hold that thought. But first, here's what happened October 22nd. Target conducts an internal meeting with suppliers. The minutes leaked, quoting directly, "If the deal fails, we raise prices November 8th. No exceptions, margins below 7% are unsustainable." November 8th, lock that date in your memory. 9 days after the meeting. That's when you'll see the real outcome, not in politician statements, but on store price tags. Let me show you what this looks like in reality. James Hall, 42 years old, lives in Ohio, family of 4, annual income $53,000. January 2025, his family grocery budget was $400 monthly. Now it's $520. Children's clothing rose from $300 to $450. Car insurance increased from $1,200 to $1,550 annually. Total, $1,817. That's exactly what the tariff war cost his family. James didn't know until August because nobody explains the connection directly. Families like James total 87 million households across the United States. 87 million times 1,800. Do the math. $156 billion extracted from American families annually. While everyone watches tariffs, China holds the real leverage. Rare earth elements, 70% of global processing capacity. Every iPhone, every Tesla, every F-35, military missiles, satellites, everything depends on 17 elements China processes. The United States mines these elements, Mountain Pass in California, but we ship the ore to China for processing, then the finished material returns. See the problem? September 2025, China announces export restrictions on rare earths. Not a ban, licensing. They decide who buys, how much, at what price. Trump responds with a threat. November 1st, 100% tariffs if China doesn't lift restrictions. But here's the thing, even with 100% tariffs, there's no alternative. Lynas Rare Earths is building a facility in Texas. Launch date 2027. MP Materials is expanding Mountain Pass. Full capacity 2028. Until then, zero alternatives. If China completely cuts off rare earth exports, American electric vehicle production stops in 3 to 6 months. Tesla, Ford, GM, Rivian, all simultaneously. Stockpiles run out, production halts, military manufacturing critically slows, F-35s, Patriot missiles, satellite systems, everything requires rare earths. Now you understand why Xi arrives at this meeting competing from a position of strength. Trump can threaten tariffs, but China can shut down entire sectors of the American economy. October 30th, 6 days, 3 possible outcomes. Here's the mathematics for your wallet in each scenario. Scenario 1, complete deal, everyone celebrates. China lifts restrictions, the United States cancels the 100% threat, trade truce extends, markets soar, up 10 to 15% within a week. Target, Walmart, Apple all rise. And here's what the media will tell you. Crisis averted. Here's what they won't say. Your losses stay at $1,800 every year, permanently. Tariffs at 18%, the highest level in 91 years, remain. Prices that rose 30 to 40%, they don't fall, they stabilize. You don't recover money already lost. Companies maintain their reduced margins. But further cuts are impossible. A year from now, when the next negotiation round begins, prices rise again. This isn't victory, it's a pause before the next wave. Everyone will pretend the war ended. Scenario 2 is worse, much worse. Partial deal. China partially eases restrictions. The United States delays 100% but imposes targeted tariffs, $2,100 in annual losses. More than now, less than maximum. Electronics up 20 to 25%. Your next smartphone costs 3 to 400 more. Electric vehicles up 15 to 20%, at 9 to 12,000 to a Tesla's price. But here's what makes this scenario worst for you personally. Imagine you plan to buy an electric vehicle in 2026. Tesla Model 3 costs 42,000 right now. With a complete deal, it stays 42. With complete failure, 54 to 57. Expensive, but you know the number. With a partial deal, 47,000 in January, 51 in April, 49 in July. Every quarter, new pricing because negotiations continue. Tariffs change. The company doesn't know what to factor into costs. You postpone the purchase, wait for stability. But stability never arrives. 2 years of waiting. Final price, 52,000. You overpaid 10,000 just by waiting. Uncertainty costs more than the worst certainty. Remember that. Stop. Rewind. I said at the beginning that both sides already know. Remember? Here's what happened October 12th, 11 days before the meeting announcement. Chinese Commerce Minister Wang Wentao met with CEOs of major American electric vehicle manufacturers. Closed-door meeting, no press. They discussed scenarios of cooperation under various outcomes. Translation from diplomatic language. China showed American companies precise mathematics, what would happen to their business in each of 3 scenarios. Before the meeting was publicly announced, companies already know. They're already adjusting strategies. You'll find out last, October 31st from news headlines. Now scenario 3, complete breakdown. And it's worse than you think. October 30th, the meeting collapses. Or worse, the meeting happens but produces nothing. November 1st, tariffs jump to 100% automatically, as Trump threatened. November 8th, the date nobody mentions. 8 days after failure, companies across America announce price increases simultaneously because their fourth quarter budgets already account for possible failure. Target raises prices 8 to 12%, Walmart 6 to 10, Best Buy 10 to 15, auto dealers add 10 to 15,000 to sticker prices, your family $2,400 in annual losses, but that's just the beginning. November 10th, trade truce expires, all previous tariffs and restrictions return automatically, plus new ones. By mid-November, inflation adds 1.7%, food prices up an additional 4 to 7%. Every grocery trip costs $20 to $40 more. Markets, S&P 500 drops from 5,900 to 5,000 within a month. 15% evaporates. Your 401k, if you have one, loses 15 to 20% value by New Year. December, wave of layoffs. Target already started. 8% of corporate staff. Applied Materials, Rivian, dozens of companies follow. Hundreds of thousands of jobs by first quarter 2026. January 2026. Official data confirms GDP fell 0.5% in Q4 2025. Recession officially declared. But here's the critical part. Even this isn't the worst outcome. Remember loop 4? How China uses rare earths. If Trump imposes 100% tariffs, China can respond with a complete ban on rare earth exports. Not restrictions, total ban. Tesla production stops by March 2026. Ford by April, GM by May. Entire electric vehicle industry halts. Military production slows critically. F-35s, 2 to 3 per month instead of 6. Patriot missiles prioritized only for existing contracts. New orders frozen. That's when this becomes a strategic war, not just trade. Because China then controls your purchasing power and American military readiness. That's the third outcome. The worst. Nobody discusses it publicly because acknowledging this dependency means acknowledging weakness. Here's where it transcends economics. March 2026. Hypothetical scenario, but realistic. China completely cuts rare earths. The United States implements countermeasures, blocking access to NVIDIA, AMD, Intel chips. What happens? American military systems operate on stockpiles, 6 to 9 months maximum. Chinese AI development stops. They can't train new models without advanced chips. Both sides paralyzed, mutually assured economic destruction, like nuclear deterrence during the Cold War, except instead of bombs, technologies. And your $2,400 loss, collateral damage in a war determining who controls the 21st century. Now you see the stakes? 7 days ago, I spoke with an economist who consults for Treasury. Can't name him, but here's his exact quote. Both administrations, American and Chinese, ran simulations. Mathematics are identical from both sides. Complete breakdown cost the US 2.3% GDP annually for 5 years. China, 3.8%. But here's the paradox. China's system is authoritarian. They can force their population to endure 3.8% losses losses without political consequences. America's system is democratic. 2.3% losses mean election defeat in 2 years. Political cost to the US exceeds China's economic costs. That's why Xi walks into this meeting knowing Trump blinks first. I let that settle for 3 days, because it means that regardless of rhetoric, regardless of threats, the United States cannot afford complete breakdown politically. Scenario 3 is mathematically possible, politically improbable, but you won't hear that on the news. October 30th determines short-term direction, but the long-term trend is already clear. Tariff war symptoms, structural competition between two systems for control over 21st century technologies. China controls physical resources, rare earth elements, manufacturing capacity, supply chains. The United States controls digital technologies, chips, software, financial systems. Each side weaponizes its strengths. October 22nd, Reuters reported Trump is considering restrictions on exports to China of goods made with American software. Laptops, jet engines, industrial equipment, response to rare earth restrictions, escalation. October 30th might provide a pause, 3 months, 6 months, a year if lucky, but the war lasts a decade because the prize is who controls global economy for the next 50 years. For you, that means your $1,800 annual loss isn't temporary, it's the new reality. Best scenario, they freeze at this level. For years, you adapt, revise your budget, change priorities. It becomes normal. Middle scenario, they rise to 2,100 and fluctuate. Every 6 months, new negotiation round, new wave of uncertainty. You learn to live with volatility. Worst scenario, 2,400 plus recession plus layoffs. Then purchasing power loss threatens your income directly. Which scenario happens? We find out in 6 days. But there's one variable models don't account for: irrationality. Trump built his career on unpredictability. Xi runs a system where mistakes mean losing power. What happens when an irrational leader meets a leader who can't afford errors? October 30th, we find out. Either rationality wins and we get scenario 1 or 2, or irrationality wins and we enter territory models don't predict. Your money depends on the psychology of 2 people in one room for 18 hours. Remember, 3 dates. October 30th, the meeting. Outcome determined. November 1st, tariff deadline. Doubling or cancellation. November 8th, companies announce pricing. Reality manifests. Between these dates, your money. 1,800, 2,100, or 2,400. Mathematics is simple. Politics is complex, but the outcome is inevitable. 6 days until the meeting that determines your loss size for the next year. I'll track every detail. The moment Trump and Xi finish negotiations, I'll release analysis with precise mathematics of consequences. Write in comments which scenario you think is most probable, 1, 2, or 3, and whether you're prepared for the worst. Subscribe, hit the bell, because October 31st, 7 days from now, you'll need to understand what happened and what comes next. Your money is on the line, time is running out.